In the fast-paced world of business, finding a clear path to profitability can be a challenge. Welcome to 0 to 100 with your host, Jared Guy Randolph, seasoned business and finance expert. Tune in for actionable insights and strategies to accelerate your business success.
Hello, Accelerators. It is time for another 0 to 100 episode, and I am very excited to introduce our guest, Nick Kosko, who is a key member of the Create Tailwind team, a financial coaching platform that is dedicating to educating individuals on achieving financial independence through infinite banking. The platform offers courses, resources, and a supportive network for those who are seeking to take control of their financial lives. He is also the co-host with Jim Oliver of podcast Breakaway Wealth, where they talk about ways in which you can break away from the norm, control your wealth, and control your life. Some of the topics that we are going to cover today, and I really want everyone to tune into this because this is a little bit outside the box of what we typically cover, but super unique and definitely something that you should know and understand as an option in your tool belt. First and foremost, infinite banking. Good, the bad, and the ugly, using life insurance as personal finance versus just for death benefit, and the way in which you as individuals can take control of your money and smart ways to put your money to work. For those of you who do not know me, my name is Jared Guy Randolph. I am the founder of BoxFi. We are the nation's leading payment consultant, providing business growth solutions through payment processing, and I'm very excited to share the network that I have built over my 25-year career to help you grow your business and become more profitable. Ladies and gentlemen, let's accelerate together. Nick Kosko, thank you so much for joining us on 0 to 100.
Thank you for having me on.
So we are going to talk about something that we have not spoken about on the podcast before, and there are infinite possibilities on the concept that we're going to discuss, and the pun is intended. But before we get into the technical aspects of infinite banking, let's talk about your background and what led you into this business, because I think it would be important for our audience to know.
Yeah. Born and raised Louisville, Kentucky, wife of almost 20 years, 4 kids, the dog, the 35-acre little farm outside Louisville, Kentucky. All I ever wanted to do, Jared, was fly big airplanes. When I was in high school, I delivered newspapers. I had a walking route. It took me about an hour to deliver about 110 pages or newspapers. And the Louisville Major Airport, which is the headquarters of UPS Airlines, this neighborhood was about, by the crow flies, like 2 miles from the airport. So I'd be out there at like 5 in the morning, 4:30 in the morning, and I hear all these big brown and white airplanes. And I was like, I said to my guidance counselor, I want to do that. And so as luck would have it, that's what I was able to do. It took me a few years because it's not a quick road. And by the time when I was 30, I got hired in that job. I got married that same year. I had my dream job. Like, to be honest with you, it was like I was levitating around town. Here I was in the right seat of a 747, flying around the world, and not a care in the world, man. I was making great money. And then we had this big economic downturn. 08, 09 happened. And about the time my wife told me she was pregnant with our first, my illustrious employer said, hey, we need to downsize. Everybody's going to get hit. So they laid off 109 pilots, and I was number 87 on the list. And it was when that happened, Jared, that I learned that I was a well-paid slave. And man, I don't know if this has ever happened to you, but once like you realize something's going on, you're like, I'm not sitting in that anymore. And that began a journey. I'm a self-professed, very slow learner. It took me a long time to learn how to fly, to land an airplane. Okay. Here's the fun part. Usually once I get it, I'm really good at it, but it can take an inordinate amount of time for me to get it. And most people would quit or the instructors would give up. Like, that's just how I am. Okay. So no matter the subject matter. So it took me a few years, and I got my job back, flying. I think it was 21 months later, they recalled me. And I was like, okay, we're back, right? We were on the precipice of having our third kid at this time. And I started interviewing financial advisors, Jared. Here in Louisville, Kentucky, there's a half a dozen to 10 financial advisors just waiting on the doorstep of the crew room, metaphorically, because they know we make good money. We get a lot of money put into a deferred compensation plan. We're kind of easy pickings. So I started interviewing all these guys, and I left every one of the meetings. I didn't hire the person. Something in my gut told me this is for your benefit, not mine, even though your stick is really good. And it was that notion of the truth was starting to like really become an important concept to me as a young man. And like I started getting clarity to there's not your truth and my truth, there's just the truth. Okay. And that's been a theme for me since. And I just couldn't put my finger on it, Jared. I was just like, I'd done Dave Ramsey's financial peace stuff in the past. I was not particularly impressed with that. I knew the math was off on that, but I wasn't smart enough to figure out on my own. So again, like things are just not clear, and I don't feel like I'm getting all the information. So one night we take off out of Louisville and we're going to Denver. It's like 4 a.m. And I say something obtuse about money to the guy I'm flying with. And he goes, "Have you ever heard of infinite banking?" And I said, "I have no idea what you just said." And we spent the next 4 nights, me trying to go to the end of the internet with this poor son of a gun named Mike at 35,000 feet as we tooled across the United States. And I asked him every question under the sun, most of which he couldn't answer. He was a brand new client of somebody who I'm very close with now. And because it's a small community. And he goes, "Hey, Nick, you just got to read the book." And so I get this book and I sit and I read it. I'm on a layover in San Juan, Puerto Rico. And I'm sitting in the Denny's in the hotel. And I've got this 92-page book written by R. Nelson Nash. And I get 25 pages. There you go. I get 25 pages into it. And I said, "Son of a gun, where's this been? I want in." And what hit me so powerfully, Jared, was that book was speaking truth about the money. It wasn't Nelson's convenient lie. It wasn't somebody else's convenient lie. It was just, this is the truth. And I appreciated the matter of fact, just get to it approach.
And if you want to wrap the story before answering this, you can. But I think it's going to be important for our audience of entrepreneurs, business owners who have existing successful businesses. They're growing, but we all have either experienced, may be experiencing, potentially could experience in the future, those moments of financial uncertainty. When you read the first 25 pages of the book, were some of the key aspects that you took away as like, oh my God, this is the truth about the banking system that I didn't know. And now that I know, I'm empowered to change things.
Yeah, I love that. And Nelson starts off by talking about the problem in the book. And it's so important. It goes with every subject. If we don't understand the problem, the solution's a moot point. Okay. And you'll find that most of the knuckleheads out there even talking about infinite banking, all they're talking about is the solution. Okay. So what I loved was that Nelson was speaking about the problems of money, like Parkinson's law. What the heck is Parkinson's law? Well, most time people's expenditures rise to meet their income. If you can't overcome Parkinson's law, you can't really collect a lot of wealth. I love how he tells the story of Willie Sutton. Willie Sutton, famous bank robber back in the day. They asked Willie, "Why do you rob the banks?" He goes, "Because that's where they keep the gold." And it was just telling this story of what the heck is going on in the world. And I was intrigued by that. I was intrigued about somebody addressing the problems, not just coming to me with the solution, which is, hey, when I sit down with the financial advisor, "Hey, how much money do you have? Where is it? And let me show you how I can do so much better with it." And then make these charts and tell me how much money I'm going to have when I'm 65 and how much money he thinks I'm going to be able to collect in quote unquote retirement. Nelson doesn't do that in his book. I was just super intrigued. I'm super intrigued when people talk about and living the road less traveled. I've never been interested. If everybody's going right, I don't care the subject. I'm always intrigued about what's over to the left.
So what are the problems that you solved that you also realized were happening in your life?
Yeah, control. And it comes down to control. And we can touch on that, but let's just talk about the problem Nelson puts up front in the book. What problem is infinite banking solving? I love that. Like, what's the point of doing anything if we're not solving a problem, right? And I would say most people are going about their life and it's just so mundane. They don't realize like there's so much opportunity to solve stuff, right? It's like pretty stimulating to go solve a problem. And he said, hey, you finance everything you buy. You either pay interest to someone else, or when you pay cash, you give up the ability to earn interest forever. And when he says that, like, I was so struck because I knew when Dave was talking about, hey, just spend cash on your cars, like, I'm just telling you, that didn't resonate with me. I didn't know the solution. I didn't know there was an alternative. And so when he said this, Jared, I was like, son of a gun. We did the debt snowball. Yeah. Did I pay off the student loans? Did I pay off the cars? Yeah, that's cool and all. But I created another problem in the process. You only told me part of the story, not the whole story. And then Nelson just starts walking through examples to prove it. And I was like, dang it. And I don't know if you've ever felt like this, Jared, like I felt then, like, there's a problem going on, but you can't put your finger on exactly what the problem is. And you sure as heck can't come up with a solution. So Nelson was just like, hey, guess what? They want control of your money and you're not being told all the problems.
Okay, so they is the bank.
They is the banks, Wall Street, and the government.
Got you. So they is banks, Wall Street, and government. Now, you talk about we basically finance everything that we buy. And if we are to pay cash, we give up our ability to earn interest. So how does infinite banking completely flip that on its head and give you the control back? Because one of the things that you talk about is helping individuals free themselves from financial slavery. Walk me through what infinite banking does to allow them to do that.
So we kind of have to understand a little bit more of like how do the financial institutions work so that I can tell you like the solution. So let's just talk about how a bank works, okay? And we can fill in the blank, your brokerage account. We can fill in the blank, the life insurance companies. Most people don't realize life insurance companies are the biggest financiers in the world. So let's just say there's Shakespeare said, if we understand the players in the play, we'll understand what's going on. Okay. So in the banking world, there's only 3 players in the play. So Jared, let's just have a little narrative here. All right. You're the depositor. You go down to the bank and you deposit money at the bank. Okay. To the bank, is that an asset or a liability?
If I deposit money at the bank, my money at the bank.
Yeah.
Well, if it's my money, it's supposed to be an asset if it's earning me interest. But if it's not earning me interest, it's a liability.
To the bank owner, is your deposit an asset or a liability?
For them, it's an asset.
All right. Don't feel bad.
Against it.
Everybody answers it wrong. Okay. All right. The deposit itself is a liability because they got to pay you back whenever you want. By the letter of the law, you are a creditor of that bank. Okay.
Yeah.
And you just touched on something really important, and I love it and I applaud you. It's the loan, the borrower, that is the asset. So like if you and I want to go buy a bank, we're going to evaluate the loan portfolio. Okay. So we've got the depositor, the bank owner, and the borrower. Now let's just apply some numbers to this. Let's just say you went down and you deposited $10,000. Now the bank is so nice, Jared, they're going to pay you 0.2%. The whole your $10,000. So that's $20. Now the bank's going to turn around and sell that money for anywhere between 4 and 28%. Okay. 28% being your high yield or high interest rate credit card. But we're going to use 5.2% as an average. So that's $520 they collect on the loan. They paid you $20, they collected $520. How much better did the bank do than you did?
Infinite, because it's not their money.
I love that. Friggin' high five. So let's just apply like some accounting numbers to that, because I'm going to get to what you just said. It's 20 goes into 520 26 times. That's 2,600% better. To your brilliance, they did it with your money. Okay. This is about leverage. Okay. The financial world is leveraging your money. You and I leverage other people's time and talents all the time. It's a copacetic thing. All right. But what people need to understand is that's happening in the financial industry, and they're paying you pittance on your dollars. Okay. So just to the control thing, and you and I talked about this before, how much of your money does the bank want?
Well, I mean, they'd like to have all of it.
All of it. How long do they want it?
Forever.
And how much of it do they want to pay back to you?
None of it.
As little as you'll tolerate, right? So that 0.2% is as little as you'll tolerate. You'll do that, right? So it's about understanding the process of banking, okay? It's about the power of leverage, okay? So what does this solve? Well, are you the owner of the bank where you bank? No. Do they love you so much that at the end of the year, they bring you a check and pay you a nice little portion of the dividends?
Yeah, sure. Very little.
Yeah, very, very little, right? So you're essentially the renter at the bank. Okay. Now, most of your listeners probably will resonate with this, and it resonates with you and I. Ownership, the concept of ownership has privileges, right? But we're not the owner of that bank. Okay. Do you know that if you go to take a loan from the bank, they're charging you to borrow your money?
Yeah.
Right. Well, why do we do that? Right. It's kind of I always think of it like this. The financial industry is playing a game so well, we don't even realize there's a game being played.
Mm-hmm.
Right. So like, if that's the problem, if the bank's making 2,600% with your money, if everyone has control of your money for 40, 60, 80 years of your life, you let this happen and, oh, your money babysitter's so nice. They only charge you 1%. Right. You know, Nelson gets into this. He says, what's more important, the interest rate they charge, or the volume of interest? What's more important?
What do you mean by the volume of interest?
No, I love this. All right. So what's most important is the volume of interest in every payment. Okay. So let's talk about this. Let's take a mortgage example. We're going to take a $300,000 mortgage, and we're going to go 5% for 360 months. It's $1,610 and change per month is the payment. Okay. If we multiply 1,610 by 360, it's $578,000. Okay. So you borrowed $300,000, you got to pay back $578. That works out to 48 cents of every dollar over the life of the loan goes to someone else in interest. Okay, Jared, you earn $1 and you got to pay me 48 cents of it. Do you care about the rate, or that you just had to pay me half of the money you just earned?
I care about the fact that I had to, from what you've presented, I care more about the fact I'm having to pay you half of the dollar that I've earned. I don't understand how the rate comes into play if I don't know what that specific rate is. So you're saying the rate is the 5%.
Yeah, the rate's the 5%, but the rate is a distractor. Okay.
Right.
The bank knows something you don't. So in the first 7 years, it's over 80 cents of every dollar goes to someone else in interest.
Mm-hmm.
So the bank is so nice. Let's just say that you had that mortgage for 5 years. Okay. Now the bank comes and they say, hey, Jared, man, you've been such a great customer of the bank. We know you've got a 5% rate on this mortgage. We're going to We'll do it for free. We're going to lower the rate to 4.5%. We'll cut your payments from 1610 to 1560, 1540, pick a number, doesn't matter. But we're going to do it for free. And we'll refinance it for you to get you a lower rate. Does that sound great, Jared? And what does the average American do?
They're going to refi, but you just said that for the first 5 years, 80% of your dollar is going to the bank. So that's going to happen again if you do a refi.
That's right. The bank knows something we don't.
Okay. So conceptually, this all makes sense. How does infinite banking come into play now that you've walked us through that?
Yeah.
It allows
Okay.
us to take control or eliminate that, and this is because I've heard of infinite banking before. I have done no research. I have the book. I told you it was my third book to read. I just finished my second. So tomorrow I'm going to start reading the book. How do we take control of that? Because it sounds like a system that we don't have the ability to take control of it unless we have a ton of money.
Yeah, it's awesome. It's a fair question. So the only reason that, what Nelson put out there, he wasn't just saying, hey, there's not a solution to this. Of course there's a solution. And what we have to understand is the various tools that are out there. And so Nelson, he came, his brother in the 1950s sold him a whole life insurance policy. Okay. Now, Nelson didn't know better. He said, all right, my brother charged me $350 a year for this whole life policy. And I just started plugging money into it. Now, I went to Dave Ramsey's financial noise course. I'm sorry, I keep saying that wrong. Financial peace course. And he told me whole life insurance is bad. And what I didn't understand at the time is that, yeah, it's not the best tool to just buy death benefit with. Okay. But it is a tool that I can use to take over the banking function in my life. Okay. And all I had to do was understand what's going on in it. Okay. So there are a lot of rules to how life insurance works, and it's just understanding what is out there. So there's a way to very specifically design a life insurance contract so that you have equity in it right away. Okay. Think of it just like your home, the home equity in this thing. Okay.
Mm-hmm.
But there's something out there called a mutual insurance company. Do you know the difference between a stock company and a mutual company?
No, I do not.
So a stock company, think AIG. All right.
Okay.
And I'll just touch on something real quick is ratings. A lot of times people get so wrapped up in ratings. Well, just know that AIG had the best ratings possible 30 days before they just about took down the entire world's economy. Okay. Ratings are bought and paid for. Again, they're a distractor. All right. There's other things to look at when you're evaluating a financial institution. Okay. But when an AIG policyholder, they get profits after the shareholders get profits because they're profitable and they distribute the profits to the shareholders. Right. Mutual companies are only owned by the policyholders. Okay. All right. So let's just think about this concept of ownership. All right. Jared, you already told me you don't own the financial institution that you do your banking with, which is fair. Okay. But if you could have ownership in it, do you think that would be beneficial to you?
Yeah.
Yeah. All right, cool. So the more money I deposit at this financial institution, the more ownership I get. That's cool. And it comes with privileges. All right. So we designed these life insurance contracts as a tool to go solve the problem of our need for finance. Most people are selling life insurance for death benefit. Okay, but Jared, if we agree that we finance everything that we buy, tell me, what's greater, your need for death benefit or your need for finance?
Finance.
All day long, right? Because you're going to spend money till the day you die.
Right.
All right. But I promise you've never sat down with a financial advisor and they said, hey, let's solve that problem, right? Because that doesn't behoove them. They don't get control.
So I want to be very clear for the audience. What you're saying is the problem is we're going to, no matter what, spend money until the day that we die. And
That's right.
A lot of it's going to be financed.
That's right. All of it's going to be financed. Okay. So we take this life insurance contract, we construct it so that you have cash to use in it right away. Okay. The normal way of selling whole life policies is that you have no cash value, sometimes for the first few years. Okay. But we build this so that you have cash to use right away. We have clients that put money into this and then immediately take loans against it to go buy cash flowing assets. Okay. So we got to have a depositor, just like the bank. We have to deposit money into the policy, and then motion is the law of God. Okay. Like water doesn't flow, it becomes stagnant and poisonous. If air doesn't flow through your lungs, you die, right? If money doesn't flow, it's dead. The financial institutions know this. Okay. It's why Robert Kiyosaki says savers are losers. Okay. Like we can't keep up with inflation storing your money in a high yield savings account. That doesn't even keep up with inflation, right? Like got to move it, right? You're in the financial space, like money moves, and it moves at like literally fractions of a second. All right. But your average American, they're like, hey, let me save up. And then maybe I'll go buy something, right? It just doesn't work that way. Okay. So we put money into the life insurance contract. And then what we advocate for is, sometimes you may have someone that's got a lot of debt. Okay. The average American, you'll see this in Nelson's book, pays 34.5 cents of every net dollar to someone else in interest. Think about your mortgage, your car payments, school loans, all of that. If you start looking at the volume of interest in every payment, a lot of times it spooks people.
So when you say, correct me if I'm wrong on this, is it a mutual life insurance policy? Is that what it's called?
Mutual, we're going to use a very specifically designed dividend paying whole life policy.
Dividend paying whole life policy.
Okay. With a mutual company.
Dividend paying whole life policy. Now, let's say I've got, first of all, how little of money can you start with to create one of these dividend paying whole life policies?
Well, I would challenge you that you'll put the maximum that you can put in, but we have clients that probably do 10,000 a year, and we have people that do millions of dollars a year.
Yeah, it's more so it's like, is this something that's really only for the elite and you have to write a $500,000 or $2 million check, or can you start with $1,000?
Yeah, we have people like, I've got college kids that have come to us.
Understood. Okay, so this is accessible to almost any and everyone out there who has some money to put into it. So let's use a real-time example and say, I have $1 million.
Yeah.
If I put $1 million into that policy, how is that structured where I can take it out right away and there is benefit for me? And there's benefit for me. Let me leave it at that because you're the expert. I want you to explain it.
Yeah. So what people don't understand is that a whole life policy is actually a tax shelter. So let me ask you, Jared, do you think your taxes are going up or down in the future?
I think they're going to completely eliminate taxes and I'm never going to have to pay them again after this year.
Gosh, that is amazing. Like, we got 5 more days before that happens,
Yay.
right?
You're letting me be myself. I believe that taxes will continue to go up. Yes, exactly.
It's just a math problem, right? Like when we print more money, what people need to understand is that that money is borrowed from the Federal Reserve and we got to pay the interest on that debt. And the way that interest is collected is through the IRS. We've printed somewhere in the neighborhood of $9 trillion in the last 5 years. And guess what? That's got a bill to it. So taxes just have to go up. It's just a math problem. Okay. So taxes are on sale right now, by and large, still. So once we put money into a life insurance contract, those dollars are never taxed again.
Are we putting in net dollars?
Yes.
Okay. So whatever we pay the taxes on the dollar on whatever it is. So we make 100,000, we have 50,000 left over. We take that entire 50,000 and we put that in the whole life policy. That, as long as it stays in the whole life policy, is never taxed again.
Yeah. And so here's what's important is to understand when I want to use the money, remember the bank, they have this powerful word called leverage.
Yes.
Well, guess what? When I want to take a loan from my policy, my money does not leave the account. Okay. I'll say that again. My money does not leave the account. All the insurance company does, because I am an owner and I have privileges, I have contractual privileges. So Jared, when you go take a loan at the bank, it's a total pain in the rear, right? If I want to take a loan against my life insurance contract today, I would just call and tell them I want a loan. I don't ask and beg for the loan. I tell them I want a loan and they say, "Hey, Nick, what account do you want that money wired to?" And I say XYZ. And tomorrow the money is in my account.
And can you only borrow against the amount of equity that you have in that policy?
Yes, sir. So what they do is they lend you their money from the general reserves of the insurance company. Your money stays in your account, earning interest tax-free.
What type of rates do they charge you when you borrow money against your policy?
4 to 5%.
And that's just industry standard?
Yeah, you'll find a couple companies that are quite a bit higher. You can use that as a tell that they don't want you taking loans from it.
Okay.
We use companies that encourage you to do this. It's a good deal for the insurance company. And we're owners of the business, of the policy, of the insurance company too. So that interest rate winds up coming back to us, as Nelson illustrates in his book. That interest winds up coming back to us anyway.
So what are the payback terms typically on a loan?
It's an interest-only unstructured loan. Okay, let's talk about that. Interest only. So the interest compounds annually and calculates daily. I'll get a bill at the end of my year for the interest that's calculated daily. So I have no monthly payments I have to make. And then it's an unstructured loan, which I know all your listeners can walk into their commercial bank and get an unstructured loan these days, right? No.
What do you sound crazy right now. Nick,
So
I'm dealing with a loan for a real estate investment right now. And Lord Jesus, God,
Yep.
Jesus, Lord.
Yeah. So I get an unstructured loan. The insurance company says, "Hey, do you want to set up any payback terms?" Nope. I'll get back to you when I'm ready. Okay, great. They don't care. All right. They place a lien on my money in the policy. Okay. And then it's ultimately secured by this death benefit. So let's just say I had $5 million of death benefit. I take out a $100,000 loan and I get run over by a truck and die. My wife gets a check for $4.9 million. And she gets whatever I bought with the 100,000. If I went and bought a piece of real estate, which I just did that a couple of weeks ago, bought a piece of real estate. So guess what? She gets that too.
Is there a max of what you can put in on an annual basis to a whole life policy like this?
No, it comes down to the death benefit. So the maximum death benefit they'll give you is 99 million.
So 99 million, so just under 100 million. Could you have multiple policies?
Yeah. There's an oil and gas rich dude in Oklahoma. He puts 800,000 a month into his banking system, his life insurance contracts.
So when he goes to get a loan to buy a car, to buy a house, to buy a property, to build a well, he borrows from his own policy.
Yeah, I don't know what he's doing with the money. He's not my client.
Yeah,
understood. I'll give you a real estate example.
Please.
So we have a client of ours. He is a extremely successful real estate investor. He's got about 500 million of real estate. His escrow, this is a year and a half old number. I don't remember what it is right now, is about 400,000 a month. Okay. So he said, why would I store 400 grand a month into my commercial bank? Why don't I just do this into my banking system? So
now, is he doing that? That's his own money, or is that investors' money?
it's his own money. He's the sole owner of all his properties.
So talk to me about the compounding effect of you put $100,000 in, and how much of a policy does $100,000 buy you?
You mean like the death benefit?
The death benefit.
Probably for year, 40? Is that right?
41. And
Yeah, probably in the neighborhood of $3 million.
Okay. So I put $100,000 cash in. It gets me $3 million. And the first year I only have a value of, in terms of equity, 100,000, but I can go back and borrow against that 100,000. So I should actually never pay for a car in cash. I should take the $100,000 to buy whatever car I'm going to buy, put it in a life insurance policy, and then borrow against that.
Yes.
really complicating stuff right now, Nick, because you're making it so simple and making me feel crazy. Okay, so how does that 100,000 grow in equitable value over the period of time it's in that whole life policy?
So when we started this, I was careful to include life insurance companies in the financial industries that take in people's dollars and they put it to work. Okay.
That is true.
All right. So what do they do with your premium dollars? Well, they go put it to work. All right. These financial institutions have about the most conservative investment portfolios of anyone you'll ever find. About 85% goes into a 30 and 40 year laddered bond strategy. Okay. We got another number of percent that goes into some of the highest rated real estate deals. Like I tried to buy a big apartment complex 3-4 years ago, and it was an assumable loan on it. And it was from a major life insurance company. It struck me. I was like, oh, I've known this to be the case. It was the first one I've seen. And then there's some equities, few percent in equities, okay, in their portfolios. So they know. So the insurance companies are basically built by actuaries. Those are the engineers of a life insurance company.
Mm-hmm.
Okay, what do engineers do? They always over-engineer things. It's like a big airplane. Just because it says max speed is 0.9 Mach doesn't mean that the airplane comes apart at 0.91. Okay, been there, done that. All right, it's not what happens. So it's like the life insurance companies, all right? So they know how many 41-year-olds are going to die every year. They don't know who, they just know how many, okay? So they know how much premium they have to bring in, and they know basically within like fractions of a percent how much their expenses are going to be. So they take these dollars, they go put it to work, they know they're going to have a certain amount of expenses, and at the end of the day, let's say for every dollar they bring in, they have 10 cents of profit. Okay. Well, they pay us some of that in dividends, and they put some of it into their statutory reserves. All right. Well, we're earning interest in this thing. Okay.
So who are the big shops that you go to and get one of these policies, one of these dividend paying whole life policies?
You would find that there's a number of mutual companies. I would say 6 or 7, probably worth a darn. There's just a couple that would get my money in it, and there's a lot into this. We want companies that have been around I'm an independent agent, by the way. Like I can go with anyone I want. I'm not married to anybody, and nobody pays me more than another. But like we want companies that have been around for at least 100 years. They've paid a dividend for at least 100 straight years. They've got flexible policy provisions so that I don't have to put in the exact same amount every year. We want them to have significant statutory reserves, meaning how much of a blow can they handle, right? In the market. And then we want them to support this. And I would tell you that there's a couple companies in the Northeast. They appear to support this, but they don't behind the scenes. Okay. I don't want to mention these names. I'm not really interested in bad mouthing the companies, but we tend to gravitate more towards the Midwestern companies. And that's because they generally have a lower overhead. And if I'm the owner of the business, like I'm interested in that. Like I've sat down with the CEOs of some of these companies, and they're committed to serving, because that's the one thing. Like I need to be able to take a loan and get that thing wired to me tomorrow, right? Like, oh, instead of 100,000 this year, I can only pay 90,000. Is that okay? Yes. Like I need that flexibility, because we're business owners, right? There's rhythms of our cash flow. Things happen, right? So you'll find there's a company out of Lincoln, Nebraska called Emeritus. There's one out of Indianapolis called One America, Lafayette out of Cincinnati. Those are 3 great companies that check all these boxes. Again, I'm not married to any of them. I'm just saying these are ones that you can go look at, that they're these huge bulletproof financial institutions. They're just kind of boring, right? Like life insurance like this has been around for over 200 years in America and like 600 years in Europe.
So I have a real estate question, and also for the sake of keeping on track with time, I think we're like 40 minutes in. And when we had our pre-call, Nick, damn you, I knew this was going to happen. And my brain is on fire. And I'm like, all right, so there's three things that I need to personally talk to you about right now. So is there any way of tying in the tax benefits of investing in real estate, like 1031s, into this structure? Or are they like, is everything mutually exclusive? They're all separate?
Yeah, I would tell you they are going to be separate. Like, so we have a video that we call the ledger. Okay. And like a financial ledger, people put the assets on the left and the liabilities on the right. Like, I would tell you, we actually drew it backwards because infinite banking requires you to think a little differently. So we kind of messed with people. And on the left side is the policy, and on the right side is our assets. Okay. And most people look at it as either or. And that's how you were taught about money. Money's either in your pocket or it's in the real estate, it's in the checking accounts, in the real estate, whatever. It's either or. Here we get both. But I would tell you, you don't want to put pre-tax dollars into the policy. That's going to violate the benefits of, hey, taxes are on sale right now. But what's important for you and I as real estate investors, we get all kinds of great benefits. Depreciation, accelerated depreciation. I've got a trash compaction company. We accelerated the depreciation on our big trucks and got all kinds of great accelerated. We get to do cost segregation, right?
Yes.
Like I know somebody who they pay zero tax every year because they perfectly go buy another Airbnb or two, cost seg it out, and they get their tax liability to zero every year. Very methodically.
Oh my God. We're going to have you come back, because this isn't the end of the conversation yet, but this is fascinating. And I think it's creating far more questions than I have answers for right now. And again, we're going to all find this. So talk to me about, from what you have told the audience, because you started with a story that, by the way, you had a great story.
Thank you.
That led into the problem. The problem is we're all going to be leveraging money for the entirety of our lives, because we're going to be making and spending money.
Right.
Into what this solution looks like with the infinite banking of putting money in dividend paying, whole life policy. How we can borrow against that. We're paying the interest, and it makes so much sense because that policy is growing in value, and that 100,000 potentially buys me a $3 million policy. I now can still get the car, still have that $100,000 in that policy, and the policy is growing in value. Like, and frankly, if I'm putting in $100,000 and, I've got to buy a house, I've got to buy an investment property, I've got to buy a car, a couple cars, whatever it may be, and I've got cash to do that, I should be throwing it in, borrowing against that. And my life insurance policy is growing. Like,
that's right.
Duh. So this is totally making sense. For someone who goes, this guy, Nick, he just said something super interesting. What is the next best step for someone who, because remember, most of our audience are established owner operators, entrepreneurs, they've got some investments, etc. How do you dip your toe into this to learn and understand it, and then go from there?
Be curious. I challenge your listeners to continue to be curious, and you can become and be curious at our website, createtailwind.com. We have a free online community. You can join it right there. You can download our app. If you go to your app store and type in Create Tailwind, all one word, it's free to join. And all of our training, all this information, the story I was telling you today, you can watch the What is IBC course for free. You can watch the Becoming Your Own Banker course for free. Jared, you can watch that course along with the book that you have in your hand.
Mm-hmm.
And it's us explaining that book. You got Make Bank Without the Bank, which is Jim's book. You can download that on Audible. If you found that my voice was like a 5-star voice, which is probably only like appropriate amount of stars, right? No, I'm just kidding.
Yeah. 5 stars, 5-star out of 62.
Yeah.
I mean, 5-star, a 5-star out of what?
Yeah, that's right. I didn't say out of what. No, but we just talk about that in Jim's book. He talks about what it looks like to be an owner, how to get cash to flow to you what do we do with that cash? But here's the thing. If you just go to our website, if you click contact me, listen, I promise you I have a 100% no hassle guarantee. If you got some questions, you want some personal guidance, to schedule a call with me. Heck, if you do that, I'll send you a copy of Becoming Your Own Banker for free. And I promise you, again, it's no hassle. So those are my offers for you guys.
Amazing. So you know what? We're gonna do our little rapid fire section here, and then you're gonna tell everybody where they can connect with you again. But man, this was really interesting. This was a great conversation, and something for those of us in 2025 are looking to figure out the right investments, expand our portfolios. This is something that from our conversation sounds like we all need to be exploring this.
Yeah. Amen.
All right. You ready for the rapid fire, my friend?
Bring it on.
Coffee or tea?
Coffee.
Number one book in business that you would recommend to our audience of owner-operators, entrepreneurs to read?
Rich Dad, Poor Dad.
I love it. Are you using AI in your business today?
Yes.
What are 3 money-saving strategies that you would suggest our audience do in 2025?
Start becoming your own banker from saving. I am not much of a saver. I'm a put it in motion person. So money saving, move your money to hard assets like real estate, crypto, and precious metals if you don't like any of those 2 things.
What is one thing that could kill your business in 2025 that we should be aware of?
Not keeping score.
That's a good answer. Give me 2 people in your life who are key that helped you build the success that you have today.
I would say Jim Oliver, my partner in this, I met 10 years ago, has changed my life. The other person is my pastor, Adam Miller.
Awesome. Beautiful. Beautiful. And what was the biggest obstacle that you had to overcome to build the level of success that you have today?
I had to put aside my ego and be willing to be 100% wrong.
Love it. Beautiful. Nick, please tell the audience where they can connect with you if they would like to do so.
Yeah, createtailwind.com, or you can email me directly at Nick Kosko, NickKosko at createtailwind.com.
Nick Kosko, thank you for joining us on 0 to 100.
Thanks for tuning in to 0 to 100 podcast. We hope you feel inspired and ready to accelerate your business. Remember, your journey to success starts with a single step. Keep learning, keep growing, and keep striving for greatness. For more resources and show notes, visit jaredguyrandolph.com. We'll see you next time.